If you're a futures trader, you've almost certainly heard the big news from Apex Trader Funding. They've completely shaken up their rules, and the biggest change of all is with their most popular account, the 100K Challenge. It now uses a much safer end-of-day drawdown. And in this explainer, we're going to break down exactly what that means for you.
Okay, so this slide right here, this is the whole ballgame. This is the single biggest reason we're talking today. Apex has ditched the incredibly stressful intraday trailing drawdown. You know, the one where your risk limit creeps up behind your profits in real time. They've replaced it with a much calmer end-of-day model, or EOD. And trust me, this is a fundamental, game-changing shift.
So what in the world does EOD Drawdown actually mean? Well, it's actually super simple. Your failure threshold, that line in the sand you just can't cross, it only gets updated once a day after the market closes. Think about that. If you catch a monster trade that goes way into profit, but then it pulls back, your risk limit doesn't budge. That unrealized profit can't come back to bite you. For a lot of traders, that's just a massive psychological weight off their shoulders. So how do you get your hands on one of these accounts? Well, first things first, you've got to pass the evaluation. So let's dive in and break down the exact rules you need to follow to get through this first critical test. Let's look at the stats for this mission, the 100K evaluation. Your objective, make $6,000 in profit. Your total risk budget is a $3,000 max drawdown, which means your account balance can never dip below $97,000. And to do it, you can trade up to 8 contracts at a time. These are the key numbers that define the entire challenge. Now, with this new EOD model, there's a brand new rule you've got to know about, the daily loss limit. For the 100K account, that number is set at $1,500. This is a really critical new piece of the puzzle. The best way to think about this limit is as a circuit breaker. Seriously, it's not there to fail you. If you have a bad day and hit that $1,500 loss, your trading just gets paused until the next day. It's basically a safety net designed to stop one terrible day from completely blowing up your entire evaluation.
So here's the daily rhythm. It's super straightforward. 1, you trade all day. 2, at the end of the day, Apex takes a snapshot of your closing balance. And 3, based on that number, they set your new failure threshold for the next day. It's a clean, predictable process. No more midday surprises.
All right, so you navigated the evaluation, you followed the rules, and you passed. Awesome. Congratulations. Now we get to the really exciting part, managing the funded account and, actually getting paid. Let's look at the rules for when you're trading for real. So the first thing you'll notice is a small change in your firepower. During the evaluation, you could use up to 8 contracts. Once you're funded in what they call the performance account, or PA, that number scales back just a little bit to a maximum of 6 contracts. So how do you get that cash out? There are a few boxes you gotta tick. You need to have at least 5 profitable trading days, and each of those days needs a minimum profit of $300. The smallest amount you can ask for is $500. And here's the best part. For your first $25,000 in withdrawals, you keep 100% of it. Apex doesn't take a dime. But hold on, before you can withdraw, you have to build up what Apex calls a safety net. It's basically a profit buffer. All it means is that your account balance has to be high enough so that even after you take money out, it's still safely above the failure threshold. It's just there to protect the account and keep it healthy. Let's put a real number on that. To request your very first payout of, say, $500, your account balance needs to be at $103,600. Now, where does that number come from? It's your $100,000 starting capital, plus the $3,000 drawdown buffer you can't touch, plus a tiny $100 margin, plus the $500 you're about to pull out. Now, Apex also has a rule to make sure you're a consistent trader, and this one is important. It's the 50% consistency rule. It's simple. When you ask for a payout, no single trading day can make up more than half of your total profit. They want to see methodical trading, not just one lucky home run. And hey, check this out. This is great news for a lot of traders. Apex did some house cleaning. They got rid of some of their most annoying and restrictive old rules. So if you've ever been frustrated by things like the maximum adverse excursion rule or some rigid risk to reward requirement, poof, they're gone. This gives you way more freedom to trade your own system. Okay, this all sounds pretty fantastic, right? But it's not free. So let's get down to brass tacks and talk about the money. What does it actually cost to get a shot at this 100K funded account? So the standard full price, no discount cost for the evaluation is $207 a month. But you see that strike through? You should pretty much just ignore that number. Why? Because almost nobody ever pays it.
Here's the deal. Apex is almost always running a massive promotion, usually for 80 or 90% off. And that brings the real cost for a 1-month shot at this thing down to around $35. This is the number you should have in your head.
Okay, so once you pass, there is a one-time activation fee. The most popular option is the lifetime fee, which is $220. You pay this once and you never have to pay a monthly data or platform fee on your funded account ever again. It's a one-and-done deal.
So let's just do the quick math. If you snag a promo for $35, you pass within that first month, and then you choose the lifetime activation for $220, your total out-of-pocket cost to get a fully funded 100K account is just $255.
Okay, we've gone through the rules, the payouts, and the costs. So now let's zoom out and put it all together. Let's figure out what this opportunity really looks like for a trader like you.
This really brings us to the most important question of all, doesn't it? Let's just forget the big flashy marketing number for a second. In this so-called $100,000 account, what is the actual amount of capital you have to play with? What is your real risk?
And here it is. The answer is $3,000. Your real risk, the amount of capital you actually have to work with before you fail the account, is $3,000. That's your true account size. The 100K is just the starting line. The $3,000 is your actual playground.
So let's just sum up the massive advantages of this new EOD model. Number 1, your drawdown is stable. It doesn't chase your winning trades. Number 2, that daily loss limit acts like a protective circuit breaker for your account. And number 3, these two things combine to make it a way safer environment, especially for traders who like to hold through pullbacks or even do some swing trading.
So in the end, it all boils down to this one last question that you have to ask yourself. Now that you understand the rules, the real risk, and the benefits, does this model actually fit the way you trade? Is it right for your personal risk tolerance? The answer to that is going to tell you everything you need to know.